In this video, we will look at Microsoft. First, we will look at the main sources of sales, how Microsoft makes money. Then we will look at some of their numbers. We will see what super investors are buying and holding Microsoft. And then we're going to come up with the fair value of Microsoft using the free cash flow yield and discounted earnings per share method to see if Microsoft a good buy at this price level. So let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. You will not miss a single new video. Okay, first let's look at their profile, their basic info. Microsoft is a $2 trillion company in a technology sector. We can see that it is up around 300% for the last 5 years. It is up around 10% for the last year and down 17% from year to date. So in this video we will see if Microsoft is a good buy at this price level. If we look at the recent 10Q quarterly report, we can see that the revenue is up from 42 billion to close to 49 billion. If we look at the main sources of sales, we can see that 17 billion comes from server products and cloud solutions. I believe Azure is the third largest cloud solution platform after AWS and Google Cloud. Cloud solutions provide infrastructure for internet projects. Basically, you can have a static website, but if you need much more features, it is possible to use cloud-based solutions. So if you want to build something complex and you need various technologies for that, it is possible to use cloud-based solutions. And this is the most fast-growing segment of the business. Then 11 billion comes from office projects and cloud solutions. For example, I have used Microsoft Office and Microsoft Visual Studio. Windows brings around 6 billion. In the past, I have used Windows 98, Windows XP, and of course Windows 7. But what happened after that was a real disappointment for me, and I switched to Mac OS. So please write in the comments below what you think about Windows right now. Gaming brings 3.7 billion. Personally, I do not use Xbox. I have Sony PlayStation 5, but the reviews are pretty good for Xbox. 3.4 billion comes from LinkedIn. It's a service for career development. Search and advertising brings 2.9 billion. Enterprise services brings 1.9 billion. And devices bring 1.8 billion. Also, 13% of the revenue is spent on research and development. And here we can see one of the main risks investing in Microsoft. It is the competition. By the way, this risk is outlined in their 10K and 10Q reports. The risk of competition. Technology is changing really fast, and the future of Microsoft is really dependent on their adaptability. So that is why they're spending 13% of the revenue on research and development. But if Google is really dependent on their search engine and Apple on their iPhones, in case of Microsoft, we can see a diversified business where the revenue comes from many sources. So I believe compared to Google, Facebook, and Apple, Microsoft has a more diversified business. If we look at the revenue by country, half of the revenue comes from the United States and the other half comes from other countries. Okay, now let's look at some of the ratios. First, let's look at their debt level. They have close to $105 billion in cash and close to 78 billion in debt. So they have more cash than debt, and debt seems not to be an issue for Microsoft. If we look at the numbers showing their moat, their competitive advantage, we can see that they have return on assets of 21%. What is return on assets? It is net income or earnings divided by total assets. Return on equity of 44%. It is net income divided by equity. Equity is total assets minus total liabilities. And return on invested capital of 34%. So these numbers are an indication that Microsoft definitely has a moat. If we look at the revenue growth for the last 4 years, the current year, and what analysts are projecting for the next year, we can see that the revenue growth was from 14% to 18%. So this will be very helpful when we will calculate the fair value of Microsoft. When researching a stock, what I really like to see is that gurus, super investors, are buying the same stock, and if yes, at what price level. And Terry Smith, investor that I personally follow, has around 10% of his portfolio in Microsoft. He bought it much earlier. He added to his position around 8% in the recent quarter. As Terry Smith wrote in his annual letter to shareholders, many people believe that the best days of Microsoft are over, but still, for several years, Microsoft brought the most growth to his portfolio. Okay, now let's try to come up with a fair value of Microsoft stock. We will use two valuation methods. The first one is free cash flow yield. I use next 12-month free cash flow yield. What is free cash flow yield? It is next 12-month free cash flow divided by market cap. For Microsoft, the current free cash flow yield is close to 3.5, while the average for the last 3 years was 3.19, which implies that Microsoft is around 10% undervalued. If we apply 10% upside to the current price, we get the fair value of Microsoft of close to $300 per share. But if we look at the same chart with Google, so blue color is for Microsoft, white color is for Google, we can see that Google has a much higher free cash flow yield. It has current free cash flow yield of 5.2, while the average was close to 3.8. So it looks much cheaper than Microsoft, so you get more free cash flow on market cap. So Google looks much more cheaper. The next valuation method that we will use is discounted earnings method. What we basically do is that we take current earnings per share. I use the growth rate of 14%. For the next 5 years, analysts are projecting for the growth rate to be from 14 to 16%. To be on the conservative side, I use 14%. We grow current earnings per share by 14% for the next 5 years. We multiply them by current price to earnings. We get the future value. We discount them back to today using the required rate of return. I use 10%. After adjusting for net debt, we get the fair value of Microsoft of close to $332 per share, which implies around 20% upside from the current price. So according to this metric, Microsoft seems to be undervalued around 20%. Google also looks much cheaper if we use the same valuation method. So if Microsoft is a good buy at this price level, I like the fact that Microsoft has a diversified business compared to, for example, Google with their search engine or Facebook with their advertising network. So I like the fact that Microsoft is a more diversified business. I like the fact that Terry Smith owns around 10% of his portfolio in Microsoft. He added around 8% in the last quarter. I like the valuation, but I like the valuation of Google much more. So one solution may be to buy both companies. If you only need to choose one, I would choose Google. I have made a video on Google. Here's the video. If you are not subscribed to the channel, you can do this by pressing this button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.